Yo, yo, yo. Good morning, good morning. What's up, Gary, Julian, Purple Mango, Sheriff, Candace, Daffy, Rambo, Spicy, Brandon, Leo, Deuce, Traveler, Tobias, Evis, Singtu, Big Lou, Green Candlestick, JB, Lona, Mel, Jazz. Good morning, good morning, good morning. Good morning, Randy. We again have a... Oh, it's over here. We again have a second day of Powell. It'll be 30 minutes after the market opens. We also have JOLTS and the petroleum status report, as well as the beige book at the end of the day. But in all importance is jobless claims tomorrow and then employment situation on Friday as well. So the week's not over even after today. I'm just pointing out there is other news coming out. Next week we'll have CPI, and then the week after that we'll have the Fed. So we have a couple very important weeks ahead of us after this. Actually, I should have kept that open. And yeah, drop a like on the stream if you're tuning in. Thumbs it up now so you don't have to do it later. Good morning, Mike. Good morning, E. Daniel, Steve, Ben. Good morning, good morning. Mel's 15th on the like. Ooh. But yeah, drop a thumbs up on the stream. Alright, so let's start this. So on the bigger time frame, as you can see, we have gone up, projected a very, very important area around 405, 407. Projected that with the inverted hammer with not amazing volume, but it wasn't bad volume either. And then yesterday, very good amount of volume poured in, and we even filled that gap all the way that goes to 397.81. You can see we just slightly went past that and filled it. So I would say 397.81 is a pretty important area. The low that we already have established here from a bigger time frame point of view is pretty important. I would also say the true low of this move is pretty important. So if you want to mark the low here and the low here, be my guest. But those would be a few areas I would look out for downside action. For upside action, I would look to see if they just push past this gap fill again in 400. If you go to the smaller time frame, you can see we're kind of battling one of those levels, the 397.80. We need to push under that, as well as 396.30s, which this can be your first target if this does break, which in fact you should just watch the previous day low, 397.60, because it's a little bit farther than that level and it matches up better. So I would watch under both of those levels pretty much. To the upside, you need to look above 400 essentially, but you do have an early level you could get on at pre-market high. So pre-market high could be your first initial entry, or look for a retest of this level besides the 400 area. But this is also essentially going to be your more important breakout spot. Which on this chart there's a lot more levels, but I wanted to go over that with you guys because that's pretty important. I might go off the other chart today just because there's too many levels here, but we know what to look for. 399.50s. So I said 399.50s and 400.60s towards 402, 403.50, 405. Below, yeah, I was gonna say I think this chart actually has a farther out level. 397.25. Scalp towards 396.40s. Below 396.40s. Pan tool. 396.40. We got 395, 394, 392.65. Which that still kind of goes with this plan anyway. It's above the previous day close and previous day low, so we're not worried about that for upside. We just got to worry about 400.60s pretty much, or below 397s. So we'll watch both of that. But that's our initial range though, guys. Even if you take out the tighter levels, you got 400.60s and 396.30s, so we got a pretty nice size starting range today. But give me a thumbs up or a yap that makes sense on what we're watching for, why we're watching it. Again, most of these levels derive from, well, at least these, derive from the TA routine. When I go to this chart, I'm merely doing this because all the important levels are already on this chart from the monthly time frame. And I'm just kind of going in here and being a little bit more tedious due to where current price is. Just giving myself a few extra levels to go off of that makes sense. And then kind of just going off of it. But yeah, drop a like in the on the stream, definitely helps out. All right, let's go to the next one then. Let's go through the rest of these, and then we'll see which ones we like the most, and then we'll add those to the list. Just also double checking to make sure I'm on the right chart. Apple. I have previous day open way up here. Previous day highs are up here. Pre-market high is very close. Previous day close. Alright, so they have a pretty tight initiating range. I would say pre-market high is a good break above level. But that's very close, so you might also just want to wait to see what happens once they get up to their previous day open, previous day high area, because it's generally the same spot. It's kind of this entire area here. So I'd watch that as well as 153.15 if you just want to watch out for that more passive level. To the downside, though, I actually would prefer to just wait till previous day low is broken. So that's not a bad one. Amazon, you got previous day high. If you go all the way down to the last green open, which is that candlestick, that's your area of supply from previous day. And you could do the opposite for yesterday. Low. If you go from the low to the top of the last red candle, you have an area of supply, or sorry, demand. I'm stupid. So let's mark that low, which that didn't mark correctly twice. Let's fix both of those. There we go. That's what we want to see. So Amazon could get some good moves off of this for sellers, off of this for buyers. Once broken through, you could start to look for the other side for buyers, for sellers. Also look for a retest if they do end up breaking either side of these supplier demand zones. Again, there's a video on this from months ago. Please feel free to check it out on the YouTube channel. But that looks like what we have to focus on for Amazon today. Let me mark that previous day open. That seems to be in a pretty good spot. Previous day close is right there. Got the previous day high. Pre-market is basically inside of that range, so it's pretty tight for Amazon. Tesla having another red start to their day. Again, you guys saw this yesterday and the day before. Lower opens. So another lower open again. We got 1, 2. This will be the third in a row. Very nasty. Let's go to the right chart. Previous day open is basically marked. Previous day close. Previous day low. Previous day close. Pre-market low. Alright, so it looks like under 184.30 and under 182.30. We can look out for more downside on Tesla. For upside, I honestly really would want to see the combination of this area broken because it's a bigger time frame level as well as the previous day close. So you end up getting two really, really important levels. And you can see just how well the after hours price action rejected it as well. Once, twice. And then here we get a lower high in the pre-market. So that'd be a pretty good breakout level to the upside, in my opinion. I think I will just wait on that. And first target would, of course, probably be where we hit our first kind of high before pulling back down. So about right here, 190. And then we got our bigger time frame level at 191.30, 193.30, 194.20. So we got a bunch of really good farther out targets if this is going to break out from here. Downside, though, very, very, very close, as you guys saw on the other chart. So I think I'm going to add Tesla as well. Meta's already against a really good spot. Microsoft, just kind of in range. Not in a bad spot either, though. Google, I like that it's just kind of tight and in range. AMD. This one was crazy yesterday. A lot of stocks, a lot of semiconductor stocks, for some reason, from what I was reading, were moving thanks to a stock called SE, which is C Limited, which they're not entirely semiconductor related, but apparently something big happening with them helped out a lot of semiconductor stocks. But that was just one of many things that helped out semiconductors yesterday. There was a lot going on for semis, but they both had pretty good days at the beginning, and you could see how the second half of the day went. But so did most stocks, though. I would say most stocks kind of went through that same process. But, all right, break below it. Previous day low. Just previous day open. Previous day close. Don't need to mark it. Pre-market high. I'm not on the right chart. Just realized. I will mark that again. Previous day low. Previous day opens pretty much marked. Previous day high. Pre-market high. All right, so it looks like we're looking above 235. All right, sorry, 234.50s and 236s for breakouts. To the upside, to the downside, looks like we're looking at 231.60. And then Netflix. Make sure I'm on the right chart. I'm not. There we go. All right, so let's add a couple of these. But give me a thumbs up or a yeah, or which one was your favorite. Going through those again, we went through all SPY through Netflix on bigger time frame for SPY, and then smaller time frame for everything as a combined. So give me a thumbs up or a yeah. Tell me which one was your favorite out of the ones I've gone through now between Apple and Netflix. Above 152. 35. Above 188.25, 187.65 range. Target. What did I say? 190? Yeah, 190. 30s. Below 184 30s and 182 30s for scalps to the downside. Meta, Microsoft. Honestly, I kind of like NVIDIA more with the 236 idea. $239.40 slash 241.25. Below 231.60s. $228.40. Just say 228.50. And then did we like any more on here? Let's see what y'all said. Meta, Netflix. That's what she said. I wish I remembered what we were talking about. I'm sure you got it good though. Netflix looks weak as fuck. Tesla, Netflix, no niet. Downside of Tesla, you like Apple. So right now we got Apple, which we did a plan for all of them on both sides, but these are the ones we're kind of focused more on, so that's why I'm typing them. What are my thoughts on Nvidia? Looks like it might pop at the open. I mean, honestly, a lot of things look like they're ready to pop at the open. I would even say SPY looks good. As long as they hold 397.60s, 397s area, I honestly am pretty bullish on today, even with everything coming out. But if he comes out and has more of a hawkish tone again, this will bring the market down. So I'd be very careful. The first 30 minutes will probably be stagnant or some upside, some downside. I wouldn't see anything too crazy happening. But then I'd say after that 30 minutes, you have Powell talking. So I would say things get a little bit more volatile, you could say. So I'd be very careful. Because in my opinion, there's no way he can say anything more damaging or helping today than he did yesterday. Because he got a bulk of it out yesterday. But overall, today is a second chance to also kind of either relieve or continue to hurt the stock SPY, that is. So we'll have to pay attention to see what comes out. But yesterday he came out with a hawkish tone, whereas literally a week and a half ago, Powell and other board speakers were already sounding more dovish than they've ever sounded, which would be bullish. So that's a little wild, coming out of nowhere. So I think it's coming from like I said last week and the week before, I think it genuinely is coming from a point of risk management, though. I don't think they're doing this to try to fake anybody. I really do believe they're just trying not to get screwed over again, because last time that happened, last time the Fed lied to themselves was, hold up, I'll find it. I will find it. It's one of these two candles. It's either this one right here or it's this one right here. I can't remember exactly which one. It's one of those two. I want to say it's this one. But overall, this is when they thought they were ahead of the ball game, and then data came out and they were like, hold up, inflation's not done. I want to say it was this one, actually. Now that I'm thinking back on it again, I want to say it was this one, because this is where price just kept falling and falling and falling, and despair was just everywhere, and nobody knew when things were going to slow down. Nobody knew when prices were going to reverse, or at least throw out some sign of, hey, we're going to slow down here soon. We just kept going and going. We even hit 350, and it took a short covering day, which is when a lot of shorts have to close their position because prices just will not go down anymore. Too many people become short, prices are going to eventually reverse, and that's kind of what happened that day. In short, that's what a short covering is. They held halfway of that candle, they hold halfway of that candle, they hold on top of those halfway candles, and then from there, they just kind of kept building up higher again finally. And then a few months later, here we are, kind of building off those lows still, so I would generally say they're just doing it for a risk management point of view. They don't want people to be like, oh, they're shutting the door on a half-point hike. They're doing this for a 3/4 point hike. No, I genuinely believe it was. I genuinely believe they are trying to do this from a risk management point of view, if that makes sense. That's why I'm saying it like that. They just don't want to kind of put themselves in a position again where it's like, oh, we're not just wrong, we're completely wrong. I'm just going to send out the small list. We'll look at whatever. Let me get a screenshot. I guess I'll just screenshot this chart. People can just go off these levels today. Oops, wrong spot. I'm blind. All right. Making sure that went everywhere where I needed to. I guess I'll post here as well. All right, I guess I'll try to find another one while we're just chilling here. 77.80. What was I doing? Oh, okay. Never mind, I see what I was doing. These are all levels from the monthly time frame. But I think what I was about to do is add this because it's too wide of a range. I was going to say it's probably really close to where we just rejected. And there we are. Rejecting from it. So I have to see if they pull back up through 210 or if they're going to continue to reject and go towards 205 today. But Boeing could be a good outside play. 207.70. Previous day opens way up here. So yeah, 209, 210. There'd be a good breakout towards 211. Or below 207.70. Baba down again. Sand dollar would be happy. We'll see where they end up today, but they're also trying to base. If you go to their bigger time frame, they're kind of where they were basing before. They're kind of there again. So I think they're just building up consolidation for a bigger move. We'll have to wait for a better break to really get the understanding of where it's going. In my opinion, it does have a little bit more downside. It's just not doing it yet. 84.20s, maybe 80 flat. Those are two areas I would look at if it does move down lower. If they do continue to keep this as support, though, and build it back up, look for a break of the 9. They have yet to break the 9 EMA on the daily. That's just a good first indication. Coin squeezing inside of itself still. All right, let's do a fun poll today. Start a poll. How? Almost spelled how wrong. How does SPY close today? Green, red, flat. Yo, what's up, Devin?
Yo, what's up?
Oh, hold up, I gotta turn you up.
Yeah, I gotta turn the YouTube down now. Good morning, everybody. You guys ready for a nice little wacky Wednesday action? See if we get any moves.
And yeah, drop a thumbs up for that pre-market prep. That was a lot of, not talk, I mean, I did talk a lot, but that was a lot of different stuff, kind of talking about the economics of things, what we're looking at, what my opinion is again, and then, of course, the pre-market information levels-wise.
Yup, react, not predict. That's good. See that down there? That's good stuff.
And y'all know me. We always cover both upside and downside. We don't sit here and just cover one or the other. Cover both sides. We drop with the dovish one. Yeah, I'll have to see what tie he's wearing. You're right. Nvidia's pushing
High
up more.
indicating.
Watch Nvidia pre-market over 236. Are the semiconductors going to rally early on again today? Microsoft pushing lower right before open. Meta did as well. Tesla just kind of down in the dirt still. Apple pushing to the upside. Yeah, we got things all over the place this morning. Right before the open. We got a couple weights breaking lower or hitting to their lower parts of their chart. And then you have a couple charts that are pushing higher. So we got some push-pull right before the open. Got a minute till the open. Thank you guys for over 100 likes. Appreciate that. Another testament to y'all again. We got almost 200 people just chilling here right before the open. You guys, and a lot of you guys were here before we even finished the pre-market prep. So good job getting up, being ready, being prepared.
All right. Microsoft gets some buyers off the low, and Apple's still pushing higher. At least that makes sense now. Kind of coming back together to the upside.
Yeah, for real. I want to see how Nvidia does it open. I want to see how Apple does it open. Maybe Microsoft just for information. Honestly, I'd like to see how Meta does it open because they're kind of at a very, very big pivotal spot. Same for Tesla. So we got a few things that are in very crucial spots. Amazon's pushing lower right before open.
It's one of those hurry up and wait days. Getting a lot of those lately, unfortunately.
Yeah, let's see how the poll's doing. Got 66 votes coming in, 38% red. You guys are pretty close, though, honestly. 38, 33. Now it's 34, 37, 28. You guys are literally within 3%. I think the last one was close, too. Y'all guys, y'all were all choosing either red or flat, or it was green or flat or something. Had like 130 votes, and it was like almost 50-50. Again, everybody's just kind of waiting for Powell, who starts 30 minutes after today's open. Just like yesterday, it's day 2. They're doing the same thing.
Apple gets some buyers off the open. Google gets some buyers off the open. Same with Nvidia. See if these are going to hold these buyer pushes on the open. Tesla, not so much. Amazon, not so much. Microsoft barely moving. Meta kind of pushed up and rejected off yesterday low. Berk B's at its pre-market low, yesterday low. Same thing with JPM. Financials not looking as hot.
Good morning, Bueller. Thoughts on Square for the downside? Looking to play the breakout of 77.30. First target 75, second 74. Honestly, I have some pretty tight levels on Square. I like it below pre-market low at 77.70s pretty much. If this breaks and you can get a retest of this, you could definitely have a good move to 76.60 and possibly 75. Like you said, that's next psychological level. I like that a lot. To the upside, though, remember, always plan for upside. There's a pretty big level at 78.50 area. I'd also kind of just keep eye on this level here. So kind of a combination of both, where we kind of hit this low here, as well as where we have this bigger time frame level at 78.50 area, 78.40. So I'd look past both of those for upside. Pre-market low is very, very close, though. So if that makes you uncomfortable, you can just wait for the retest, or you can wait for 76.60. That does look pretty good, though. I like the tight range it has, which a lot of things have a tight range. You can see even SPY has a very tight range this morning.
Tesla broke that pre-market low. Meta still rejecting while Google's pushing up. Apple rejected back to pre-market high. Nvidia's coming back towards pre-market high. Financials catching a little bit of a bounce. Stuff kind of going everywhere. XOM getting to its pre-market high over yesterday close. If he gets and holds this level at 112, 113 should hit. You think Jay Powell will keep it shorter today than yesterday? It seemed like they went over quite a bit.
I think it'll be the same size meeting today. Yeah, because they were like, all right, guys, we're going to be quick and fast with the 5-minute interview each time by each of you. Because at 11:30 we got that big whatever vote, and then it was like noon, and they were still going through their little 5-minute conversation with each other. That was crazy. They did go overboard yesterday, but it is politics related, so.
Starting to reject, Meta breaking pre-market low.
I mean,
Coming under the.
y'all
Go
saw the
ahead.
questions that were asked yesterday. That's how it is every time they go in there. It could be something completely financial related, and they'll be asking questions about stuff that makes no sense. So that's just politics. It's just politics. But that's what was being asked a lot yesterday.
Tesla coming down some more. Apple giving us a nice indecision candle on the 10-minute. Still got 4 minutes and 30 seconds on the 10-minute. Mel's and some Meta puts. Yeah, Meta's pooping under that pre-market low. Good stuff.
So is Tesla.
Yeah, Tesla poops. Google's still trying to hold up. Netflix is coming down under pre-market low, but still above yesterday low. So you see 0662 break for the better move. Spot coming down a little bit more. 397.63 is pre-market low. Market low, yesterday low, pretty much same level. Apple trying to retake that pre-market high. XOM still battling against it. Google still holding up. Meta's came back up to pre-market low. Microsoft battling the yesterday low area. NVIDIA still trying to hold above pre-market high.
Microsoft not helping out Apple this morning.
Mm-hmm.
AMD, Nvidia, complete opposites in the first 8 minutes. Almost 9 minutes.
It seems like a lot of the sectors aren't lined up. Google and Meta are doing opposites.
Tech's the only major green sector right now, too. Industrials are flat, basically.
It's pulling back closer towards that pre-market yesterday low.
Discretionary and comms are down under 0.5%.
We got a minute left on our first 10-minute candle in the market, but we are also waiting for the 10 o'clock data / Jay Powell speech. Yesterday, they kind of just, sold it off, even though there wasn't really too much pre-released like notes. Like, that's not really a meeting that they pre-released like his speech. That's like question and answer.
There were some bearish comments at the beginning, though.
Yeah. I almost would want to go and really time it up and see when they started selling it off versus the first time he spoke, because it seemed like as soon as it hit 10 o'clock,
Oh,
it was like...
it didn't sell off because he started speaking. It sold off because of the comment that came out at the beginning. They released a comment right at the beginning before he even came out and started speaking to anybody.
Fair enough.
And then he repeated that comment during his questionnaire. Right. So that was what kind of brought it down more, even more. It was very decisive, and it was mainly because, and I had made everybody aware of this, it was mainly because he had come out the week before and the week before that, and even if it was just a comment or a question to him, he would say that his tone was way more dovish. It was like, oh, okay, well, things are looking a lot better now, kind of vibes. And then it turned into, well, we're keeping the door open on the half-point hike, though, and that's why you've been seeing that get priced in. Last week when I showed y'all that, it was less than 20-30%. Here, I'll show you right now what it's at.
I think it's like closer to 70 now, right?
Yeah, it's way closer to 70. They priced this in big time. Yeah, look, 74% now. This number was below 20%, like no less than a week and a half ago.
It's like they know something about some data that's about to drop that we don't.
I think I can actually go to this one and see the difference, the date. If it'll show me.
Tesla trying to hold a little bit here. Microsoft still holding above yesterday low.
Yeah, look. 1 week ago, it was priced in 30%. A month ago, it was priced in less than 10%. They have just now started pricing this in more, and that's why we're getting this all those red days. And it was mainly because of just the tone going from dovish to potentially not dovish, potentially saying, hey, we're probably going down more. They're really covering their bases so they don't end up like that big day I was showing y'all. Again, I would go to pre-market prep to get the summary and gist of it all. It was a very good breakdown I had. Yep, his prepared remarks. That was what tanked it. It wasn't even any of that questioning BS.
NVIDIA is still trying to hold pre-market high. Pushed off it again. See if it's going to take out this previous intraday high.
Yep, Mike, potentially 100%. It's kind of what most of these days start off with too. Just an initial footing. Where are we? Like you said, spy testing both sides. F the market, man. We're gonna get a Latino George Lopez on the Fed board. Dude, facts. That's seriously the biggest issue. Everybody else who's like watching the Fed for the first time, watching that, they're like, "Wait, we don't have one." It's like I didn't even know this was an issue. Yeah, neither did we. Keanu's actually from Mars. He's not human at all. He's Martian. Get
Keanu's
the
got that 40-yard dash reveal later. Amazon coming down to that yesterday low. Tesla still having a hard time. Microsoft breaking yesterday low. Apple rejecting some more. Exxon's having a hard time at pre-market high. Google's coming back to pre-market high. If it breaks that, they could help Meta come down more. Netflix moving lower. Looking to see if SPY takes out this pre-market low yesterday low, or if they're going to catch support. We are getting some of the more bigger weights pulling back. Financials not pulling back. They're at their pre-market high. With Berkby, JPM. JPM not as strong.
Tesla hitting first target from the first 5-minute breakout it had. Need to watch how they react to 182.30s. It's the next breakout level to the downside.
Dang, wag. That's a nice one, bud. What percent was that? Did I send this to Josh like this? Yeah, I can. Sweet.
What are you sending me?
That's wag took Tesla puts for 20%. Nice little trade.
Oh, nice. Yeah, that had to have been taken. Yeah, I was gonna say in less than a few minutes, cause good shit. That was WAG, you said?
Yeah, and he scaled out right before work. Nice.
Something light.
Something light.
$112 votes, 39% saying red, 33% saying green, 28% saying flat. You guys are pretty much neck and neck. Red being slightly favored here. If I had to vote, since I'm not allowed to vote, it doesn't even give me the choice, I would probably also choose red. I would say red or flat. Getting some possible buyers off the low of this pre-market range here. If they can push through today's open, they could probably reach the pre-market high. If we get a continued rejection here, though, that looks better for more downside action. See if we get a crack at the previous day low or not. Do have 12 minutes before Powell starts speaking, though. Before the entire event begins again. I will try to have part of the stream up. I actually didn't even look if I got copyright yesterday. I doubt I would. Let's take a look real quick. Did Bueller get a copyright for streaming public knowledge? Ah, we didn't. We had to share. Ah, who are we sharing this copyright with? It just pops up with the US government on a channel. Oh, okay, cool. They didn't care about that stuff. Okay, cool, cool. Well, we will definitely do that again then. Cool, cool, cool. Alright, yeah, so I'll have that up whenever it pops up. No push through the open yet. They are very close to it still, though. 398.40. Getting good volume on that previous candle. If this candle can follow up, this looks really good for a bounce to the upside. Try to hold this ground and get some rising volume. Tesla paying off. I'm honestly impressed to see Apple still holding this 152.30 so well. Amazon's at the low of their demand, a previous day low. If they end up cracking under 92.70s, watch for a retest for a continuation down. They're at a crucial spot, though, as Tesla pushes lower. Tesla and Amazon working lower together. But still, not really pushing their sector down that much, so I wonder what else is in that sector keeping them up so much. We'd have to go look through and see. Meta broke a very key area around the 182.60s, 183s. They can't retake that. That's not looking good for comms. Microsoft pulled back while Apple's trying to hold. Nvidia and AMD still not really caring about what the other are doing. Yeah, we just have a lot of different charts going on right now before Powell. They're holding today's open still. No volume follow up yet. Still got 2.5 minutes in this candle. Morning, J-Bake. Amazon breaking demand. See if they continue to hold under 92.70s.
Microsoft holding under pre-market low as well. SPY still holding up pretty well comparatively. We got Berkey and JPM slowly creeping up, Nvidia going up, XOM going up. So a couple things going to the upside still. Google's still holding up. Meta's struggling. Apple's up better than Microsoft.
Be sure to drop a like on the stream and also to vote on the poll. It's free to vote. Definitely go check that out. How do you think SPY will close today? And drop a like on the stream. We're only 4 likes away from 150. You guys are awesome. Not even 30 minutes into the market open and already hitting 150 just about. You guys are nerds with the song. I commented on it the other day as well. I think I'm going to just find another playlist. I think today will be the last day you hear this one. Nvidia, though, holding with pretty good volume. Very impressed by the Nvidia chart. Apple still defending even with nothing helping it out.
Got less than 5 minutes.
Nvidia just gonna rally right before he starts talking.
You gotta do you gotta run it to Christmas in July with the Christmas music.
Dude, yeah, hell yeah.
Yeah, Nvidia pushing that.
Please, I've started to hear this playlist in my dreams. Those are nightmares, my friend. Those are nightmares. When you're dreaming for real, hearing dreaming. Y'all are nerds. Oh my god. Really good 40% entry on Nvidia. They're doing really well after the entry. Great time to take profits on some scalps. Could set a farther target. I could see why some people would not enter this, though, just because it is right before Powell. But still, very nice little looking chart. Especially on that breakout. Plus, AMD is finally following, so you actually have some sync movement there. We haven't seen that all morning. Google pushing higher.
Comms are picking up, yeah.
I was going to say Meta's also coming back.
So's Netflix.
All right, as soon as we see Tesla and Amazon start reversing to the upside, that's when everything starts pumping. Apple did not break one time. That blows my mind. It pushed a really good level here in pre-market, held it, and it's just holding it ever since. That is amazing, considering nothing helped it out. That was amazing. And now you have SPY pushing through today's open. They pushed through it once, twice, third time. They got barely above it a fourth time, and now they're really above it on this fifth try.
That would be a rule of 5. Right before.
Dude. Nvidia really just hit 238.
Apple's coming back up to pre-market high. Tread lightly. We got less than 2 minutes. Probably get some more remarks. Got some data. Get a nothing burger. Bell sniping.
All right, let's go get a link for this amazing event.
10-minute volume on the video coming in.
Actually, I don't know why I'm looking here. I could just go to YouTube. I probably have like 50 channels streaming it to me right now.
Ooh. So far, a little bit of sellers coming in. Amazon breaking lower. Meta rejecting. At that pre-market yesterday low. Breaking that pre-market yesterday low. More bulls battling than yesterday, so we'll see what happens. Be careful, there are more bulls present than yesterday's sell-off. But so far, bears are winning. Apple breaking lower, Microsoft breaking lower. Tesla at 180 about to crack.
Today, Grayscale.
Microsoft coming down, Amazon still. Google tried to hold pre-market high. Banks came down to their pre-market low. Nvidia came back towards pre-market high, but wicked off the 9 right above. Buyers showing up again, coming back up to that pre-market low, yesterday low. Google's still holding up. Apple catching a decent sized wick. Same with XOM. Seen quite a few wicks. Tesla not so much. Yeah, pretty volatile right now, so be careful. Gonna wait for these 10-minute candles to give me a direction. Still no trades for me today.
Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. And I'll note at the outset that this hearing has a hard stop of 1 p.m. This is traditional for the Fed chair.
Yeah, 1 p.m.
And
So
we intend
3 hours from now.
strictly observe. I now recognize myself for 4 minutes to give an opening statement. Thank you, Chairman Powell, for your testimony today. This week, you stated that the Fed will, quote, stay the course until the job is done, and that is to restore price stability.
Battling.
This is positive.
Getting lots of volume coming in. Who's going to win?
Facing a very strong headwind from the
All right, I have the thing up now.
Democrats are pressuring the Fed to stray from its narrow mandate. Without, it's a page out of their same old progressive playbook. When they don't have the votes to achieve something here in Congress, they turn to regulators. And now, Chair Powell, they're looking at you and the Federal Reserve. President Biden's kowtowing to the far left is what got us into this inflationary mess. I urge you to reject the ideologues who put their social agenda ahead of economic prosperity. High prices continue to eat away at workers' wages and retirees' incomes. Since President Biden took office, we've experienced inflation at rates not seen since the late 70s and early 80s. Inflation rapidly accelerated after Democrats passed their so-called American Rescue Plan, which poured nearly $2 trillion of inflationary fuel into the economy. By June of last year, the consumer price
Apple
index
finally
showed
breaking.
inflation skyrocketed from below 2% to nearly 9%. And personal consumption expenditures, the Fed's preferred measure of consumer prices, ballooned to 7%. Instead of being rescued by Democrats, Americans were punished with pain at the grocery store and sticker shock at the pump. While inflation is now below its mid-2022 peak, it is persisting at rates well above the Fed's target. It remains broad-based and continues to hammer Americans' pocketbooks. In fact, a recent Gallup poll shows half of the respondents say they are worse off financially than a year ago. It's clear that there's still a long way to go in the effort to bring down costs. I look forward to hearing you reaffirm your commitment to that work today. Republicans also want to hear from you regarding some concerning developments at the Federal Reserve on the regulatory front. Recently, the Federal Reserve's Vice Chair for Supervision announced a quote-unquote holistic review of bank capital in the Fed's regulatory regime. However, it seems that only a small group within the Fed knows what this means, what it entails, how much review is being vetted by the full board, and the type of quantitative analysis the Fed is performing.
This dude's tie is pretty
the Fed
nice.
shouldn't operate in the shadows, especially when the regulation in question can have broad and significant economic effects. It's also unclear the motivation for the Fed's holistic review, particularly when so many board members have stated that
Rambo, you were hearing my
is very
dog.
well
I just told my dog to
capitalized.
be quiet.
And in a review
You were
capital
hearing that, though.
standards
You're not
should be
crazy.
targeted. It also appears the Federal Reserve Board is laying the groundwork for climate policy to be implemented through the Fed regulation with an opening salvo to quote-unquote
She's doing it again.
scenario analysis. Addressing an issue like climate change is important, but a policy that should originate here in Congress by the elected representatives of the people, not the central bank. As you said, the Fed needs to stick to its knitting. I agree. There is concern from many that the Fed is picking up new needles and knitting partisan sweaters. At such a precarious time for our economy here at home and the global economy, that would be a mistake.
I'm gonna push a little
Thank you
bit
for being
higher
here today. I
now.
look forward to your testimony and the questions by our
See if we
members.
take
The chair
out
now
that spot we
recognizes the
sold
ranking
off
member of the
from.
committee, Ms. Waters,
These buyers
for
are
4
taking
minutes for an
control if
opening
we
statement.
do.
Thank
That'll
you
be
very
that
much,
opening
Mr.
price
Chairman.
that we
Good morning,
tested so many
Chair
times
Powell.
there.
Since your last visit, our country, under the leadership of President Biden, has made major progress to improve economic conditions, including adding a record 12 million jobs, reducing unemployment to its lowest rate in 54 years, while also reducing the deficit by $1.7 trillion. Unfortunately, many families are still struggling to afford basic necessities.
Unfortunately, we're about to run up
because
that
of
check.
inflation. What's more, interest rate hikes are making borrowing, especially for mortgages, outrageously expensive. Since I raised this concern for you in a November letter, the rate hikes continue to have an outsized impact on housing costs, which are, as you know, a primary driver of core inflation. But, Mr. Chair, I think that you will agree
Got a new
that
10 minute
Congress
can on the
also
market.
has a role.
It's pushing a
That's
little
why
bit higher
I'm
here.
somewhat disappointed that after 2 months,
Everything seems to get a buyer
Republicans
reaction
have
coming
taken
up
no
back to their
serious
pre-market
action
highs.
to
Google
address
Health trying to come to a
inflation.
new high today.
By
Meta had
this
a nice
time last
buyer
Congress,
reaction.
House
See if we're going to take out
Democrats
this
had passed
399
the
area,
American
previous
Rescue
intraday
Plan
high, then
to
pre-market
provide
high
relief
above.
from the ongoing pandemic, which included our committee's efforts to provide $70 billion for homeowners, renters, businesses, and first responders. If Republicans are
Nvidia
looking
pushing
for
higher after that
ideas,
retest.
committee Democrats have put forth additional bills, like the Build Back Better Act, to bring down costs for Americans, especially housing costs. Even more concerning, we're just months away from an economic catastrophe beyond what we have ever seen, including spiking interest rates, massive job losses, and global instability. I'm talking about the threats by Republican leadership to force a default. on
All
our
right, I'll
nation's
wait till
debt
they're.
if we
I mean, they're just bashing each other. I'll just wait till they're ready to go. I heard them start off with hating on Democrats. Now they're hating on Republican. I mean, both sides are clearly in love with each other. They just don't want to say it out loud.
Before we push up and rejected.
I'll turn the music back on. Trying to monitor it for you guys. So if I see anything change, we'll go back to it. Yes, Maxine Waters has been in Congress longer than most of us have been alive. Yep, literally. But yeah, good job on NVIDIA, guys. I'm glad I talked about that prior. Also, I talked to you guys the other day about the channel we have, where it kind of just posts bot alerts based on my watch list for the day. And Leland will choose the favorites for the day. Today it shows Apple, Tesla, and NVIDIA, all because I really only posted 3 today. But all of those have done well. Apple's still holding, so I wouldn't say that one's doing well. I would just say it's still holding. Tesla did really good to the downside. I also said, please don't be greedy as it was pushing lower. Tesla, don't be greedy. It was pushing lower. I was telling people, please take profits. NVIDIA had another break above alert pop up. Within a few minutes, it was hitting 238. You can see now they've hit 238 again. They actually hit over it just now. And are still kind of having problems moving higher, which I don't blame them. Nothing else is really moving with them, so makes sense. And then, of course, the other trade with Apple, Tesla, Nvidia. Yeah, Apple. I'm really impressed that this is still holding 152.30s. That is very impressive.
Shout out to Zaytoven for 22% on CrowdStrike. One and done. Like to see it.
Consent to submit for the record the latest CBO long-term budget outlook on the unsustainability of our debt, most recently released. And without
So far,
objections,
rejecting off that previous intraday high area, see where we're going to come down and put a higher low at, or if we're going to go take out that wick. Microsoft is rejecting coming down. Amazon back under yesterday low. Apple couldn't get over pre-market high. Google slowing down.
So that was my trial by fire, the emergency response to rescue the economy, and the legislative response, the Dodd-Frank Act, that successfully stabilized our financial system. So 15 years later, as I take my place as the ranking member on the Committee of Oversight over U.S. banking and monetary policy, I recall the solemn oath that I swore to myself back then to make sure that this kind of calamity never happens again. The monetary policy report that we're receiving today is largely a narrative of a return to normal. Lead times to manufacturers are back to pre-COVID levels. The job market
Microsoft slowly creeping down some more. See if that's going to bring down Apple.
give an oral presentation or testimony. Without objection, your written statement will be made part of the record. Chairman Powell, you're recognized.
Chairman McHenry, Ranking Member Waters, and other members of the committee, good morning. And I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we had seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with the revisions to the previous quarter, suggest that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above our longer-run objective of 2%. The 12-month change in total PCE prices has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, there is little sign of disinflation thus far in the category of core services excluding housing, which accounts for more than half of core consumer expenditures. To restore price stability, we will need to see lower inflation in this sector, and there will very likely be some softening in labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation. Turning to growth, the U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Although consumer spending appears to be expanding at a solid pace this quarter, other recent indicators point to subdued growth of spending and production. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight. The unemployment rate was 3.4% in January, its lowest level since 1969. Job gains remain very strong in January, while the supply of labor has continued to lag. As of the end of December, there were 1.9 job openings for each unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historic lows. Turning to monetary policy. With inflation well above our longer-run goal of 2% and with the labor market remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases over its past two meetings. We will continue to make our decisions meeting by meeting, taking into account the totality of the incoming data and their implications for the outlook for economic activity and inflation. Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If, and I stress that no decision has been made on this, but if the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate hikes. Restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Chairman Powell.
I look forward to
I'll
not
now
answering your
recognize myself
questions.
for 5 minutes for the purposes of questions.
Yeah, he's not saying anything new.
Chairman Powell, there's been a lot of discussion over the last
As
24
expected.
hours about the effect of rate increases on the economy. A lot of debate about what you said yesterday in the Senate. But no one asked you this directly. We have a March meeting coming up, Open Markets Committee meeting coming up in 2 weeks. How do you think about the March meeting? What's your approach to that? What are we likely to see?
Thank you. So I won't repeat what I just said in my testimony, but
We're
if I
back
turn to
up
the
towards
March
399. See if we're going to pop it
I
this
guess I would
time.
say
Short-term
that we
volume
have
is
some
coming in. See if
potentially
that's going to
important
transfer over
data
to the bigger
coming
time
up,
frame.
data to be analyzed. One of them came out at exactly 10 o'clock.
With nothing new coming out, we could get a pop to the upside if he doesn't say anything new.
But we're also getting a jobs report on Friday.
Meaning we've already
and a
taken the hard
CPI
hit.
and PPI inflation report next week. So those will be important, and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what I said, that does include these reports yet to come. They're going to be important in our
Getting that
assessment of
pop.
higher readings.
See if
that
we get
have
pre-market
recently
high.
received, and of the overall direction of the economy and of our progress in bringing inflation down. And we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. Larger point, though, is that we're not on a preset path, and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher, longer. Is that still the case?
Yeah, so, and as I said in my testimony, we look at the data since January.
Yep, CPI next
and
week.
also the revisions to the November and December inflation data, and they suggest that the ultimate level of interest rates is
So to
likely to
repeat,
be higher than we'd expected.
And what are those economic factors?
So going back to January, as I mentioned, the softer inflation readings of November and December were revised up. We got a very strong inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending, strong manufacturing data right across the board. And as I pointed out, some of that may have been affected by very warm January weather, but nonetheless, all of it pointed in the same direction.
Okay, let's move to regulation. Chair Powell, in January, the Federal Reserve put
SPY
out a
looking to
policy
finally break
statement
range?
noting that digital asset custody is a permissible activity if done in a safe and sound manner.
Yep, 4 minutes on this 10-minute
However,
candle
if a
and
bank
30-minute
can
candle.
demonstrate to the Fed that it can conduct that
NVIDIA's still
activity in
trying to
safe and
push
sound
higher,
manner,
helping us
capital
out.
impact
Google's
of the
still holding
SEC's
up.
staff
Meta's slowly
accounting
creeping
bulletin
up. Tesla trying to
effectively
come back
precludes
around.
banks
Needs
from
pre-market
offering
low.
digital asset custody
Amazon's getting
service
over
on
yesterday
scale.
low.
Are you aware of this staff accounting bulletin by the Securities Exchange Commission and its impact on custodial services?
I am aware of it. Of course, it's an SEC accounting bill. This is SAB 121, I think. And
That's right.
Certainly aware of it, and we do follow general accepted accounting principles in our
Yes.
capital regulation.
Okay. Well, without objection, I'll submit to the submit for the record my letter to the bank regulators about this. So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission has regulated it so that it cannot be done. Next question is certainly about bank capital standards. You got questions about this yesterday. Chair Barr has announced a holistic review of capital requirements. As I said in my opening statement, there are a lot of questions about this process. And previous statements by members of the Fed governors about the adequacy of current capital standards. And so while the Vice Chair for Supervision has announced that the Fed will engage in a holistic review of capital regulation, is that Fed staff? Is that done at the, at the governor's, the board level? What is the process? There are a lot of questions that people have about his statements. And so we want to understand why it's necessary for the Fed to conduct a holistic review and what that process is. So, my general question is, do you still agree with your previous statements about the adequacy on a generalized basis of our financial system? Or are we to read into this that we're not adequately capitalized and there's a high level of risk in the system that we're unaware of at this point?
Thank you. So the why really just is that as a new Vice Chair for Supervision, Vice Chair Barr has launched into, he's taking a fresh look at everything, including capital. That actually was typical of the last two people to have this job. So that makes a lot of sense. In terms of the process, it's certainly conducted under Vice Chair Barr's leadership with input from the staff and discussions with governors on that committee, and I'm kept broadly apprised about what's going on. But the bottom line is nothing has been proposed to the board. Nothing has been formalized at this point. It's a lot of work that's going on. I think discussions are going on, meetings with industry and that kind of thing. When we get to the place where that's appropriate, the board will be carefully briefed. Ultimately, we'll vote on a proposal, and that proposal will go out for comment, and we'll solicit comment from any and all commenters, and we'll look very carefully at that. So it'll be a wide open process in the sunshine.
Thank you. I yield back. Now recognize the gentlewoman from California, the ranking member, Ms. Waters.
Thank you very much. Chair Powell, I agree with what you said on February 1st, that Congress must raise the debt limit because of what you described as the highly risky consequences of failing to do so. You are perhaps the most important expert on the debt limit, which is why I find it very concerning that your recommendation to raise the debt limit in a timely manner is being ignored by my colleagues on the other side of the aisle. I'm also concerned that the consequences of this brinksmanship are imminent. Fitch
Apple's still holding above
Ratings said this week,
152s.
They may seriously look at
Amazon
downgrading
curling back up into
the US
demand.
debt based on the
Watch Tesla
escalating
over 182
brinksmanship
30s.
they are observing.
Meta holding
Even
back
if
up.
Congress ultimately addresses the debt limit at the last minute. This is history repeating itself.
I hit it too many times.
Standard & Poor's downgraded
Nvidia almost
our
hit
debt
240.
back in
239.40
2011
was the target it
when
hit.
Republicans last controlled the House and threatened default. The Bipartisan Policy Center later found that the 2011 debt limit debate cost us $18.9 billion in higher borrowing costs, even though we never defaulted. To put that into perspective, that could have been leveraged to provide up to $200 billion in loans to small businesses through the State Small Business Credit Initiative, or to provide hundreds of thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee, had no qualms about paying our debts when Trump was in office. 3 times they addressed the debt ceiling in a timely manner without holding our country hostage. But Republicans are ready to tear down the hard work of Americans everywhere to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk you see if Congress continues to delay action on the debt limit, both for our economy and for individuals and families?
Let me start briefly by saying that we have no role and seek no role in what is really at the heart of fiscal policy, except I will limit myself to the 2 things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. 2 really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default of something of that nature, which we don't think will happen here. But no one should be thinking that we have the tools to protect the economy from all the potential effects of that.
Thank you very much. I don't want to miss what you said. I somewhat quoted you when you said that Congress must raise the debt limit because of what you described as a highly risky consequence of failing to do so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again, these are fiscal discussions, and we don't want to be a part.
There, how's that sound?
Really, they're between elected officials.
But you are an expert
Pre-market high.
on the subject.
Well, I spent a lot of time on this, as you'll recall.
As an expert on this subject, you are concerned about the high risky consequence of failing
just
to
really
do so.
wanting to
Is that correct?
say
Did
that.
I correctly quote you?
That's correct.
Thank you. And so, again, let me just go a little bit further. The chair mentioned that he had either written a letter or maybe even had some conversation from Janet Yellen about the time limits that she had attempted to describe. Is it your understanding that she said she could maneuver and kind of manipulate things so that she paid the bills that were due, but this could only last until about June? Is that your understanding?
Honestly, I would really have to not try to interpret the Secretary's words for you. That's really up to her to do.
Got him.
Can she keep us afloat until about June?
I don't, honestly, that's not for me to say. These are really questions for the Secretary. I'm sorry.
Have
Got
you had any
'em.
conversation with her about the statement that she made about being able to
Gosh, she's getting
manipulate,
pissed.
The debt and pay bills that were coming due out of another account, etc.? Did you have that conversation with her?
The conversations that you and I have privately don't go anywhere. I don't talk about them with anybody, and the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get you
Gentlelady's
in a-
time is expired. The gentlelady's time has expired.
Did I have equal time with you?
You sure did. He went over time.
If I did, thank you. I yield back.
I now recognize the Vice Chair of the full committee, Mr. Hill of Arkansas.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being with us. You're welcome anytime. Don't wait till we ask. If you want to volunteer and come, we love having your views on many topics. Thanks for talking about your commitment to price stability. You know, we've had this discussion last June between us. I do think that's the primary mission of the Fed, and I think it should be the only priority of the Fed is price stability, because it's the legislative branch and the executive branch that really are responsible for, quote, full employment and having that policy environment and making sure that that's right. So your commitment to price stability is welcomed by this committee. Yesterday in the Senate, you suggested that you supported a regulatory framework, a broadly regulatory framework for digital assets. Is that
I want
right?
to get that pre-market high pop here, see if we're
And
going to get
is it your view
400.
that if we had a
40 cents
regulatory
away.
framework here in the United States for digital assets, that there'd be more transparency and rules of the road for both consumers, investors, and developers?
Absolutely.
And would it, if we had those rules of the road for business seeking to use and develop blockchain as a potential new technology in their business and tokenized payments, that again, that would be beneficial to business to know
I did not
how
mean
to
to
go
do that.
about that.
Yes, and to assure that it's all done in a safe and sound manner when we're talking about banks.
Understand
My bad.
how they could even participate in that market in a safe and sound manner. Do you agree that a regulatory framework would help on that?
Yes.
And then finally, we've grown up in our country, and it's unique in the world, that we have a dual banking system. And due to a quirk here in Congress over 100 years ago, we have insurance is regulated exclusively by the states. So would you believe that that regulatory framework would also have to preserve some sort of role, subject to safety and soundness, you know, for states to play some role in that regulatory framework for digital assets?
Let me just say, I think that it certainly works in banking and insurance. I have no problem with those.
Right. But you think it could, you consider it possible that it could also work in digital assets?
Certainly.
Yeah. Thank you. Turning to a topic that's been a subject here for nearly 4 years, central bank digital currencies. Article 1 of the Constitution reserves coins and money issuance to the Congress, and we've in turn delegated that to the U.S. Treasury, which has since 1912 engaged the Federal Reserve as their fiscal agent. You've testified here many times before that to issue a central bank digital currency, that would have to be authorized by statute by Congress. Is that still your testimony?
That is absolutely the case as it relates to a retail CBDC. There are potential forms of a wholesale CBDC that we need to look at. We've always been talking about retail CBDCs, and that's something we can certainly congressional approve.
And what would be a parameter on something that's not a retail CBDC where you think that that could be issued in some form or fashion without Congress's direct statutory authorization?
It would, so it would be, let's, for example, it would just be something between banks. It would look an awful lot like that. Might ask for it. That's a real good question too.
Yeah.
But it's just something that's literally within a wholesale.
But that speaks that you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside the yeah. So that leads me to FedNow, which is supposed to be up and running, I think, this summer, somewhat behind the scene there. I would like to ask you to formally have the full committee briefed on that by the Federal Reserve. I know the chair of the Kansas City Bank was involved. She's now left. And I think the committee has a lot of questions about FedNow, how its interoperability will work, how it's going to roll out, and also just a question that we've been asked that why the Fed wire system isn't up 24 hours a day, 7 days a week now to benefit consumers that are using Venmo. Do you have a thought on that?
Not sure why we're not 24/7 on that, and we, of course, we'd be delighted to come up and brief the committee on
That'd be good. We'll take you up on that and the right person from the Fed. And Mr. Chairman, I yield back.
Gentleman yields back. We'll now recognize the the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California for 5 minutes.
Thank you. Mr. Chairman, I want to thank you for bringing to our committee's attention several
This
years
guy's
ago
scary looking.
the importance of tough legacy LIBOR, some $16 trillion of instruments where the creditor wouldn't know how much the debtor was supposed to pay. This committee, we passed legislation over a year before the LIBOR hit the fan. You issued regulations 7 months before the absolute deadline. I hope we do this in other areas, and it's my understanding that with those final regulations, we're
think
done.
that's a good volume.
And we've solved the LIBOR issue. Is that correct?
That's my understanding as well.
People talk about inflation, and they somehow say that it's a matter of the personalities and politics in the United States. Others argue that the entire world is hit by inflation because Ukraine and COVID. I think we've got the answer to this question in that inflation is considerably higher in the Eurozone than it is in the United States today. And it's very hard to say that Joe Biden is responsible for inflation in Germany. I commend the ranking member for bringing up the debt limit and the harm that's already done to our economy. If we solve the problem tomorrow, we had less investment than we would have had yesterday. And I would say that I commend the president. He's going to issue a budget plan tomorrow. And perhaps
Tokyo
in their
Drift.
time, one of our Republican colleagues can tell us when the Republican budget plan will be released. We are all eagerly awaiting it. Housing is a huge part of inflation, and we've left it to local government, but the permitting process there guarantees scarcity, which guarantees high housing costs. Mr. Chairman, we've talked back in 2001 and several times even before that about wire fraud. And having just bought a home, I saw the process up front. Everybody's very nervous about one thing, and that is, will the buyer of the house be tricked into wiring their down payment to the wrong account? Or will the seller, the buyer be tricked into, or the escrow agent be tricked into sending the money to someone other than the seller of the property? We talked about this back in 2001, where I urged you with your FedNow system, which I'm glad is on track to move forward, to have what the Brits have. When you send the wire, you identify not only the number of the account you're sending it to, but also the name of the person or entity that's supposed to receive that. At that time, back in 2001, you said that payee matching is not the best way to do it. There are other ways to do it, and that you'd be happy to get back to me as to how you're going to make sure that an email from a Nigerian prince does not get the wired funds, particularly in a housing transaction, wired to an account number that turns out to be in Lagos. What progress do you have? When can
Bro, what the
buyers
fuck's this guy
have a
talking
system
about?
where they're sending it to
It sounds like he
a
got
named fee
scammed
as well as to a number?
back in the day, and he's still mad
I
about
hope
it
we did come back in a timely way to you on that.
by a Nigerian
But,
prince.
it's a problem you've brought to our attention, you're right, over many years, and we continue to focus on that.
Well, the bureaucrats who are working on this don't want to do what the Brits did. They've proven it can be done. You said you were going to accomplish the same goal in some other way, and it has been a while, and it's not solved.
Our market's
Nor
bigger.
Are you aware of
Our
any
market's bigger.
solution? I would hope that you would go back and say, we don't want to add this anxiety to every real estate transaction. We go back to the drawing boards, follow what the Brits have done, and have pay matching. Finally, as
Do what the
to,
Brits have done. Ask the
crypto,
Americans for money.
Cryptocurrency says what it means. Hidden money. That's what it means. And if we impose know
Yes,
your
you did
customer
divert.
and anti-money laundering statutes to it, it won't be crypto anymore. What crypto wants is to have part of its ecosystem above the waterline, visible and subject to know your customer, and then have the rest of the iceberg below the waterline.
Gentleman's
time has
time's
expired.
expired. I will now go to the gentleman from Texas, Mr. Sessions, now recognized
Texas.
for 5 minutes.
Chairman McHenry, thank you very much. Chairman Powell, thank you for joining us.
Bro, all that talking, and that person didn't get any response because he just kept talking.
I know that the
About-
Fed
yeah,
considers
it's
divergences,
traumas.
and you talked about it as you spoke in your opening statement about consumer price index.
Went from Lagos and Nigerian
personal
prince to
consumer
cryptocurrency.
expenditures, inflation, GDP, and all these things are talked about in your
Full port on Texas guy, I hear
report,
that.
the monetary report of March 3.
Republican, Democrat, I don't care. Is he from Texas? Long.
A couple days ago, I had an opportunity to see that an economist, Arthur Laffer.
Yeah, Lee, then it's like, wait, I forgot to connect everything I was saying just now. Hold up.
That spoke about literally this country doubling GDP. Now, I know we're putting CPI, PCE, inflation, all these things into a mix. But he said that if we made changes in health care to efficiencies, we could double the current GDP rate. My question to you that I hope you can answer is what you think about that. Is that something that is in this document that I have missed? And it's seemingly to a person who follows this, as Art Laffer does for 50 years, what do you think is an important way to look at efficiencies in healthcare? Thank you.
So no, that's not in our monetary policy report. I'll just say one thing, and that is we do spend something like 17 or 18 in that range % of GDP delivering healthcare. Other similarly wealthy countries spend 10%. So it's the delivery system. It's not that the benefits are incredibly rich or anything like that. It's just that the delivery system is very expensive. That's $1 trillion a year that we spend and get nothing for it. This is fiscal policy, but I'm responding to you.
Jerome's going off.
I would think that he may have meant that if we had a delivery system that saved that $1 trillion that doesn't really get us anything, then that would be great for the economy, which I would agree with.
So you've spoken of supply chain disruptions because it in fact is an inhibitor or an accelerator as we gain that advantage. You just talked about some seemingly which would offer some validation to Mr. Laffer as he spoke about the huge importance of this. Is that something you should start paying attention to where policy?
Bro, why is he
not
holding this
only
up?
the Fed, but
Like
your
he's like selling his book, like he's
banks
on
around the country would start looking
Oprah
at
or something, like
putting
promoting his new
pressure
book.
on us to gain those efficiencies as a result of a global view.
So on supply chains generally, they have suddenly been tremendously important.
Holding that up like my boy Jerome Powell doesn't know what's on the inside of that.
Really have been something that we've had to study carefully.
It's
In
a
terms of
retirement
healthcare
community.
delivery, that is strictly a question for you and for the parts of the government that are charged with it. The Fed does not have a role to play and does not seek a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence. You've got a role.
This guy, I don't know what page he's even on.
education. You've got a role in who's in the workplace. You've got a role. Interest rates, and yet my point is, it's such a staggering number that impacts us. Just love to have you go back. Perhaps we from this committee need to give you some direction on that. But I think your testimony today, it recognizes the staggering impact on that. I don't think it's political. The answer may be political, but I think the actual numbers are not political. It's an inefficiency that's happening across the country.
And we're back down to today's open after failing the
And
pre-market
so
high
I
breakout.
wanted to get your take on that, and I appreciate you being here as always. Thank you for your confidence and your hard work that you give this country. Mr. Chairman, I yield back my time.
Someone yields back. We'll now recognize the ranking member of the Agriculture Committee, Mr. Scott of Georgia, for 5 minutes.
Can't even
Thank
ask
you
any
very
questions,
much,
really.
Chairman.
Bro, none of them have.
And welcome back, Chairman Powell. Now, Chairman Powell, listen to me very carefully here, because
This
I think
guy
we're on
is
the
about to
verge
drop
of
some
making
bars.
a terrible mistake. Back in 2008, if you recall, Barney Frank then and Miss Waters asked me to take a look and kind of work with you and the Fed. You were a board member in 2008. And we came to the conclusion that we needed a more equitable playing field between our large banks, like Goldman Sachs, Citigroup,
Yep.
and our regional and smaller banks, like Truist and our community banks. And we changed that. But now I hear that the Fed and the FDIC plan to drop a new rule which
Yeah,
seeks
literally,
to
Jay.
apply the long-term and higher capital requirements that were created, and you and I did this back in 2008, and you remember, that were created for the Goldman Sachs and for them. And now we want to apply these rules to the regional banks.
I like his little butt he's got
There's a
going.
big difference. And we've omitted this difference if you proceed in this manner. I think it's very misguided. It works, and you and I worked on this.
I think this is
Recall,
bullshit,
you
Mr.
were a
Powell.
board member. And we saw that we needed to have a better playing field to protect.
I thought your stream was
you
glitching.
all go along with
Yeah, this guy's got a powerful voice.
put many of
I'd go to
our
church to this dude's
regional
church.
banks and small community banks out of
Read some
business.
audiobooks.
So I want you to reverse this. First of all, tell me.
Through a game of
am I
Warzone.
speaking the truth? Are you all planning to all of a sudden here put these smaller and regional banks under the same heavy or financial load as your large worldwide banks? Tell me.
No, we're not planning that.
Powell's like, oh, sorry, what'd you ask? I was lost in your voice.
In tailoring to address the different size and risk characteristics of financial institutions, and certainly nothing like that for the regionals. They won't have anything like what the very large, most systemically important banks have in terms of overall regulation.
Yeah, because I remember clearly you and I were back, I think we were on this side then, talking about this in this same committee room. And you worked with us on that. I'm glad to hear that. Where is that coming from? I mean, it's a concern. It's just a rumor. Have there been any discussions about removing the playing field and the guardrails we have here, the differentiations in the requirements between the regional banks, community banks, and your larger global banks? There's nothing to that?
Well, I would say this, we're required by the law now, and we're doing this. Dodd-Frank actually required us.
Yes,
Suggested that we should tailor, and then the S2155 then required it. And
Everyone's waking up because they're like, oh my God, there's an actual conversation going on.
appropriate tailoring.
All right, so that's off the board. We're not going to change and put the smaller and regional banks under the same financial obligation role as the large banks. We got that right from you, correct?
Yeah, that's right.
All right, good. Now let me turn to China. I'm really
Now
worried
let me
about
turn to China,
and,
bro.
Right now, people may not know it, but China
This guy
is
got
the
me.
world's largest economy in terms of
The way he
purchasing
said it.
power.
Now let us
Now,
turn to
last
China.
week, I talked about this move where we didn't blow the balloon.
That guy
up.
got me weak.
And this is an example of what I was pointing out.
Gentleman's time's expired.
Oh, come on. Give him more time.
Mr. Lucas of Oklahoma for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, I'd like to follow
Why
up
does
on
it seem like the
topic of
Ramblers
capital
go for
standards.
longer?
One of those things we've discussed many times together. As you know, commodity markets have seen significant volatility in the last few years. And during times of tremendous economic uncertainty, like we've seen, end users turn to the markets to hedge risk, particularly those in the agriculture and energy sectors. And I know that the Fed is early in the review process of potential changes in capital requirements. Can you, well, I'll ask anyway. Can you commit to ensuring that these changes will not increase the cost for banks providing those commodity derivatives to end users?
That's a really specific, can I?
He's like, is this the right committee to be asking that kind of question?
The work even addresses that, so.
Fair point.
Happy to come back to you on that.
And that particular response makes me feel better, because after all, those products are very important to my folks and make a great deal of difference in how they're able to address their issues. So, as you discussed earlier, and as you've consistently assured, the Fed's not a climate-making policymaker. You and I have talked about this issue, again, many times in the past. However, I'm concerned that the Fed could be heading in that direction and could be laying the groundwork for climate-related stress tests that would reduce access to capital for entire sectors of the economy. This would also open up the Federal Reserve, potentially to political pressure, and force the Fed, in fact, to make policy decisions related to climate change. We've seen, for example, this administration turn to regulators to impose
Amazon and
climate
Tesla still
policy as an
curling.
alternative to the legislative process. Chairman Powell, how careful are you in ensuring that
Chairman
the Fed
Powell.
does not place itself into the climate debate? And how can Congress ensure that the Fed's regulatory toolkit is not, shall we say, warped into creating climate policy outcomes?
So I think we do have a narrow but real role there, which is around bank supervision, making sure the banks understand and can manage their risks over time from climate. I think my colleagues and I all understand that it's a tightly circumscribed role that we're playing, and that we're not looking to move into an area where we're actually becoming a climate policymaker. I would completely agree with you, though, that over time that border needs to be very carefully guarded. And I will tell you that I will do that as long as I'm Board of Governors.
I very much appreciate that, because again, it's a very
They
important
replace him
issue
to the
for
next
District
week.
of Oklahoma. Traditional production agriculture, oil and gas, and the actions that the Fed takes have a significant impact back home. So it's vital that we resist the demands to do that sort of thing now or in the future. And I very much appreciate that response. And with that, I'll yield back the balance of my time, Mr. Chairman.
Gentleman yields back. The gentleman from Massachusetts, the Ranking member of the Digital Asset Subcommittee.
I personally wait for the candle close, Braden. Or if I exit early, I wait till it's the end of that candle so I realize, like, okay, it's pretty much past where I want to exit so I don't screw myself.
Treasury would begin to meet regularly with leaders from the Fed and from the White House to discuss a possible CBDC, central bank digital currency, and other payment innovations.
Amazon's still curling.
It was mentioned.
So's Tesla.
From it. It said,
Microsoft trying to do the same, kind of coming up. Google's slowly creeping up.
And its technical experimentation on central bank digital currency.
Is this a higher low on the day? We'll find out.
When you might be
got about less than a minute on this next 30-minute, 10-minute candle.
Public updates. What's the timing on that?
We did go out for comment in general on a CBDC a year or so ago, and I do expect we'll go out. I can't give you a date, but we'll certainly go out and engage. We engage with the public on an ongoing basis. Yeah. We're also doing research on policy and also on technology. That's what we're up to.
I'm aware of the Boston Fed has a partnership there. The Hamilton project over there with the folks from MIT Media Lab, they're doing a great job. But it says here that the discussions would include technical experimentation. I was just wondering, at what level are you talking about making decisions on architecture?
Getting that new candle, 11 o'clock.
We're not at the stage of making any real decisions. What we're doing is experimenting in kind of early.
Careful with NVIDIA. They broke under the 90 EMA last 5-minute candle. This could be the breakdown for NVIDIA.
What's the most efficient?
Watch AMD to break the 90 EMA with volume as well.
We're making progress on sort of technological issues. The policy issues are equally important, though. We haven't decided that this is something the financial system in the country want or need. Right. So that's going to be very important.
Right. Well, I think I speak for the chairman as well. Would love to have more dialogue with the Fed on that, and maybe bring in the folks from MIT as well, and just make sure that Congress and this committee is as up to date as others. Let me switch over to Fed now. There are some champions of digital currency and stable coins in particular that continue to cite the need for faster payment systems. However, as was earlier mentioned, the Fed Now is a service that the Fed is working on to finalize that will allow for instant payments between bank accounts.
We'll come back to that when they're done talking about crypto. Let's check out our sectors. Tech seems to be holding up over the previous day close pretty well. They opened higher, had a little bit of a dip towards it, ended up holding it multiple times, and then picked back up. So it looks like as long as they hold previous day close, tech is holding. Healthcare had a little bit of an opposite. They broke previous day close after pushing it after open, and then just kind of dipped down from there. Kind of have a little rounding move to it, so I wouldn't say it's completely bearish yet. It does look like it has some buyers trying to keep it up. So I'd look for healthcare to try and recover over the previous day close. Same story for discretionary, as you guys saw from Tesla and Amazon both having weakness today. I'd look for them to see if they can curl up to see if they retake today's open and yesterday's close. If they can, more buyers can step in for that chart, and that can also help SPY turn a little bit more green. As you see, they're pretty much flat. Comms retaking today's open. You can see they kind of started lower, pushed back over it, held, came back down, held, and now we're just getting a small buy reaction off of today's open. So again, kind of keep eyes on that. Yesterday's close. Those seem to be the key area for a lot of these sectors today. As well as for financials, the banks. They are holding off of yesterday's low as well as yesterday's close. So definitely pay attention to that. They also have today's open, not yesterday's. Today's open right there in smack dab middle of both of those, yesterday low, yesterday close. So we'll see if they end up holding that or not. There you guys go. I got the music back on.
Potentially getting that higher low here. Google taking that pre-market low. Josh has been calling it out. Google creeping up some more. Bank still holding up. NVIDIA trying to retake the 9.
How's everyone in the stream doing so far? Not that exciting of a day. Makes sense too. We got a lot of the bulk of the info yesterday, kind of what's going on today. A lot of people might even just ignore what's going on today, price action and news wise. NVIDIA retesting the pivot. Good call out, Mike. Eva said XLE is drilling. Ooh, good call out. Yeah, they're down the most today.
XOM's under pre-market low, just kind of slowly dripping down.
Meta is weak, but hopefully it will increase in buyers like Google. Yeah, I feel you, Noxta.
Coming back up, see if we're going to take out that pre-market high again and previous intraday high. If not, we're just going to be kind of forming a wedge. Like Josh said, we might not get hardly any reaction, but the short-term time frame is getting candle to candle increasing buyer volume as we're coming up. So see if that's going to continue. Amazon's getting to opening price. Apple's over pre-market high. Microsoft's at yesterday low. Google's at yesterday high.
I do think we'll get some upside once all this is over, because people will finally be like, all right, we don't have to worry about anything till tomorrow. So I think you'll get some relief buying after lunch. $164 votes. 44% say red, 30% say green, 26% say flats. We have slowly turned in favor of red. Thank you guys again for over 160 likes. You guys are very awesome. Love each and every one of you. Thank you very much.
Google's getting over that yesterday high with increasing volume. See if that's going to continue. Apple's coming closer to that previous intraday high over pre-market high.
Nvidia holding up pretty good. They're going to retest high of day again. AMD hitting a new high of day. AMD didn't even get under the 9 EMA. Google on fire. Microsoft on fire. Meta's on fire. Tesla's on fire. Amazon's on fire. Oh, good job, DX Mac. He actually just took the trade I was looking at. And I was telling y'all Amazon and Tesla are curling. I said it right here. And I said it in stream. But he just posted his trade. Getting above where it was kind of curling up at. Getting above entry on that. And then taking profit at today's open. A very strong pivot point. Very good job, DX Mac.
Got a new 10-minute candle.
Good job, Deep. Good job, anybody who played Tesla or Amazon. Both of those curled up pretty well. Just took a little bit of time. I really started liking it after they made this higher low and produced this candle, making that new high. That's kind of what made me like them more. And then on the Amazon chart, when I was telling y'all it was curling up more, they were kind of doing the exact same thing. They kind of pushed above after making this low here. Nice little wick. Got back above that. Now you can see the 90 MA2 is just kind of curling back up. Hold up, I need water. I'm like dying over here. But then I started liking it more after I saw this candle hold, because I like that it kind of came back down, held a good portion of this candle, which this was kind of your igniting candle. But I like that they held a good portion of that candle and then held again on this candle. So that's kind of what made me like that at the same time as Tesla. And then at the same time as both of those, what made me like it was SPY was battling the 398.25 level. So a hold of that gave it extra promise or extra confidence behind the Amazon Tesla finds, which again, those aren't going to the moon. Amazon went to today's open. Tesla's still just fighting the middle of its range. So it's not like they went to the moon, but still really, really clean and easy to find breakout areas with good risk too. Just got to be super patient today. Google on fire. AMD still holding up near high of day. Nvidia's trying to make a lower high, it looks like, on their 5-minute time frame. Netflix also at a double top. I step outside with that Zyrtec in my system and my body incinerates. Just starts falling to pieces right in front of you.
this is something, if you want to get the best result, you know, you need a high bandwidth feedback in the system, even when there's averaging on the back end.
So this is something we only think about during waking and sleeping hours, as you can imagine. It's really hard to know what the lessons are. Again, we really thought things would. Nobody had seen the supply chains collapse. No one had seen labor force participation plummet. We didn't know, or unemployment go to 14% and higher than that, really. We didn't know how long it would take to go away. And if we ever see this pitch again, we'll know how to swing at it.
We'll now recognize the
bunch of firsts.
gentleman's time has expired. The gentleman, its time has expired. We'll now go to the gentlewoman from Missouri, the chair of the Capital Markets Subcommittee, Ms. Wagner, for 5 minutes.
I thank you, Chairman McHenry, and Chair Powell. Welcome. Thank you for your service and for being here today. Yesterday, I was pleased to hear you discuss how inflation is severely hurting the working people in America. In your testimony, you also state that strong wage growth is good for workers, but only if it is not eroded by inflation, and that is key. Inflation is a tax, a hidden tax on every American. If the Federal Reserve were to shirk its mandates to stabilize prices, leaving inflation alarmingly high, what would it cost America's hard-working families in Missouri's 2nd Congressional District and beyond?
So I think the costs of failure to restore price stability would be extremely high, and while there will be costs to success, the cost of failure will be much higher. You'd be looking at an extended period where people learn to expect and live with high and volatile inflation, and it's very, very hard to have rising real incomes during such a period. So with that, thank you.
Can you reassure the committee that the Fed remains committed to bringing prices down for our constituents?
Yes.
Thank you.
Hereby assured you.
And changing topics here a bit, as China's economy reopens and about 18% of the world's population resumes its consumption of oil and other key goods, what sort of inflationary impact will we see here in the United States?
So a faster reopening of China, which looks like we may be seeing, it does have the potential to put upward pressure on commodity prices, but it also would mean a faster sort of unraveling of the problems in supply chain. So those would be offsetting effects. I think sitting here today, we don't expect a net big for the United States. It might be bigger for other parts of the world, but we think it ought to be moderate overall.
China is one of the world's top oil importers. And do you expect any inflationary effects on global energy markets as China's oil consumption returns to their previous levels?
I think oil prices could be affected, and I think that's a big concern in Europe. For example, we have our own domestic oil, and we've got a lot of natural gas as well.
We sure do. I wish we were actually harvesting more of that liquid natural gas. Chair Powell, you, Vice Chair Barr, and many others have recently identified that the banking system is well capitalized and strong.
King Cabina.
Bank capitalization remained robust during the shock of the pandemic.
All right,
and shutdowns of economic.
I'm turning that off yet again. It's just more, just jam music with y'all. No, I'll show y'all what I was typing. So I was just reading trade floor because one of my main keys of every day is to try to keep this floor active, you know, without spamming it or anything too crazy. But I was replying to somebody on Trade Results channel. I was also posting the bot was 3 out of 3 today. But Noxa was saying he took a loss and he was just wondering what was going on. Just trying to get feedback. I don't think he was like too mad at himself. I think he's just wanting feedback on anything. But I was just saying, because he bought here, I'll show y'all. He bought here on this first push, and then it kind of came back down, and then he cut. So he's wondering what could he have done differently to catch this pump afterwards, and then he showed it on the 2 minute, and then he showed it on the 5 minute, so you get two different point of views. And then I was pulling up my perspective which, hold up, that's not it. Here it is. I was pulling up mine on the 5-minute, and I was showing how his entry was pretty much the first pump this chart got. He wasn't wrong. It did have a good high, a good low. It had a decent higher low. It made another higher low right here. But I was just saying how that was just the first pump. And if you guys watch the Buy the Dip playlist, a big point that I make a lot of the time is that you don't want to jump into these positions first. You don't want to be the very first push. I almost always wait for that first push to start. Wait for a second higher low or double bottom to hit, and then that second push is the one you want to be a part of. So anywhere in between these two candles, he could have definitely taken better opportunity on. But he wasn't crazy, though. It had decent base there. So that's what I was typing, so you don't think I'm crazy. And then I was posting how the bot is 3 out of 3 today. I'll show you what's up. So the first one it posted was Apple, which was very early on, which is crazy because it's the last one that ends up working. Tesla below 184.30. I posted Apple chart saying as long as it holds this area here, you should be looking good, which we went over that in the stream. You guys know well. Tesla, which was breaking below 184.30s. It looks good to 182.30s. If that can break that, you can look for more downside. Apple back to square one with no SPY push. Tesla hitting first target. So Tesla kept selling while SPY was just kind of range trading, and Apple was range trading. Nothing really new on that. Leland even talked about what could happen if they did lose that level I was talking about. Then I spammed Tesla. Tesla kept falling through the floor. They went through 184.30. They went through 182.30s. Breaking above on 236 for NVIDIA. I post it right after saying, oh, they're at 238 now. So they did a really good push instantly. Apple still holding 2 out of 3 with bot before Powell with Apple in range still. You can see it's still posting it because it's like it doesn't know what to do. So I posted again. It's just still holding there. And then finally, what is it? Over almost 30 minutes later, this chart's finally hitting that first target at 153.15. So 3 out of 3 for it today. And that's all I was typing. I'm just kind of checking on people in chat. I check my DMs. I check the different channels to see what's up. If you have access to the Discord, you need to always check my channel, of course, because it has the daily list on it. I'll drop some good updates on it. Me and Leland try to keep it updated. This is a new channel that seems to be doing really well so far, where anybody can type what trade they're taking, entry, exit, all that good stuff. Trade floor is just good to kind of get news to pop up, as well as just information from anybody looking at stuff. And then trade results is honestly just cool to go back and look on and see, oh, okay, what's going on with how's everyone else doing in comparison to me, or how are they doing on their trades. Let me see what kind of entry they took. You can see Rambo here. This little Rambo reaction there. Really good information by different members, though. Really, really good information. But those are the channels I always check in the morning. If you have premium, I almost always check DukeBot in the morning just to be like, okay, did he close anything? Is he opening anything new? And then I kind of move on from there. Premium, just to kind of check on what people are talking about. Same thing for Lifetime, just to see what people are saying. But that's what I'm checking the entire time I'm on Discord while also streaming to you guys. I love to hear that, Rambo. That's the best feeling, honestly, when you take a couple trades, regardless of winning or losing, and then afterwards go review, and you're like, oh, I'm good for the rest of the day now. I can just chill, I can relax, I can just see how things go down. You don't have to trade the rest of the day now. You're chilling. We're just perfectly in range. Nothing to really talk about. Let's see if we're about to go make a lower high here under 400, or if we're going to make a double top and pull back down, or are we going to make a new high and continue higher? There's a couple different things we could do from here. It's okay to be forward thinking, Jazz. There's a difference between being biased and forward thinking. So it's okay to look ahead and think, all right, and that's exactly what I do every day in stream. You know, I don't really have bias. You know, I might have my own opinion on what it might do, but that doesn't make me sit there and have to go, all right, well, I have to trade like that then. If I don't, then I didn't stick to what I said. Like, no, it's not like that. It's all situational, conditional formatting. You know, it's like, all right, well, if this breaks a new high and has good volume, I can look for more upside. If it doesn't, we get a wick on top and a good volume steps in, I could look for a potential rejection. You know, it's covering your bases, really. As long as you don't follow through with it, you're not biased, if that makes sense. Like if I say, oh, if it makes new high, I'm gonna get into calls, and then it doesn't, it rejects it, and I still get into calls. Well, I didn't go with what I said. I still ignored with what I planned. So it's good to be forward thinking and talk about what's in front of you. Been sitting on my hands so long they are turning purple. Spy looks like a diamond. It does look like a little diamond, doesn't it? I draw one, but I'm horrible at drawing. But I agree. But that's a big thing a lot of traders don't have, Jazz, is that forward thinking. Just, all right, what's in front of me and what can happen. That's all you're really discussing. You're not sitting here saying, oh, this has to go up, this has to go down. I have to follow through with my downward plan from here. It's like, no, you don't. Just plan for both sides and play what happens. Totally fine to cover both sides. That's why I do it. It's more powerful. You get way more opportunity. I feel like you learn better because you're not sitting there just thinking, oh, I'm only good at calls or I'm only good at puts. Like, that's such a mental thing. You're not. You're not only good at just calls. You're not only good at just puts. It might seem like that to you, but it's all in your head. When in reality, it's the exact same thing for either side. Boeing has SHIELD AI set to collaborate on artificial intelligence autonomy for defense programs. A bunch of little Iron Mans flying around.
That sounds fun.
As traders, we have to be forward thinking, as this is what market is too. The key is to have a plan for either side like Josh does every day. 100%. Log notepad. Jerome Powell said, we are aware of lags of monetary policy effects. Slowing pace of rate hikes this year is a way to see more effects of lags. I thought that was going to say something different. $173 viewers, 173 likes. You guys are legendary. And almost 173 votes. This is your AI captain speaking. Welcome aboard. Dude, literally. That's what it could be like. SPY still pulling back on this lower high that seems to be made here under 399.40s. Looks like they're headed back to today's open again. Yeah, they're touching it right now on the low of that candle. Breaking today's open. Nvidia is still pulling down from my lower high mention, almost at higher low. Lower high mention at 239.40s. They broke under the 9 EMA. AMD still hasn't pulled down that much, even with Nvidia dropping so much more. But still, you got a high volume inverted hammer on that new high for AMD, so that could be the high of day for them. Google broke under their 9 EMA, pulling back down more. Same for Microsoft. Tesla also, but everything seems to be in this little bear flag looking channel. Amazon, very tough pullback so far. Apple just literally sitting sideways. Nvidia breaking lower, good call out. Thank you, B, for helping me with charting, working on things I need to improve, and streaming every day. I feel like I've learned so much in the past 4 months of being in this community. I'm so happy to hear that, Jazz. That means the world to me, seriously. The debt ceiling talk is happening again.
Activity.
The highly uncertain effects of that kind of an event.
So monetary policy is obviously very concerned with interest rates. If global capital markets begin to decide that we're really serious about hurting ourselves this time, is it possible that we could see interest rates rise more because borrowers of United States debt decide that we're actually a little risky? Is that possible?
I think that and many other things are possible. The thing is, we've never crossed that line, and if we cross that line, we're going to find out. And I think it's highly
Dude, he almost
So
said
that's
F
possible.
around, find out.
You know I don't like pressing you on these things, but you said this and many other things are possible. You want to elaborate on what might be in the category of many other things?
rather not, actually.
Okay. I figured. All right. Thank you, Mr. Powell. Again, I really thank you for your really responsible conduct of monetary policy. And there's a reason that you are insulated from our political desires, and I very much appreciate that and yield back.
Gentleman yields back. We'll now recognize the chair of the Small Business Committee, Mr. Roger Williams of Texas.
Thank you, Mr. Chairman, and Chairman.
Decently long meeting.
Good to have you here. In past congressional testimony,
Texas guy, Josh, go Texas.
Support protecting the state-based system of insurance regulation, which is the most effective and competitive in the world. In my home state of Texas, is the world's 7th largest insurance market, proving the success of this system. Now at the International Association for Insurance Supervisors Conference in November, there is the opportunity to have the U.S. state-based aggregation method become formally recognized as comparable or equivalent to the insurance capital standard. We should not be following the European model that has increased regulations and less competition, and we should prioritize a model that encourages deregulation, competition, and less government involvement in pricing. So my question is, Chairman, can you highlight the benefits of the U.S. state-based aggregation method compared to the European model regarding market resiliency and systematic risk? And can you confirm that you will push for aggregation methods?
Wicking off yesterday low, pre-market low again.
I can say this, I do think that our insurance regulatory system has proved itself appropriate and adequate and gotten the job done for a long time.
No, Mike, I actually was muted and said a couple things and didn't realize I was muted until I said something and Josh didn't respond, and I was like, oh, I'm dumb.
Details of the capital requirements, but
Be like that sometimes.
Right. But our bottom line is our side works, the other doesn't. We need to stay where we are.
our side works.
Yeah, thank you. Also, in the past, you stated that banks were well capitalized. We've talked about that today. But now there have been increased conversations about raising capital requirements. Numerous economic studies have found that raising capital requirements for banks will increase borrowing costs for their consumer and commercial customers. And I'm somebody that's owned 50 years. I've never had a day I wasn't out of debt, so I'm concerned about this. And implement additional regulatory capital requirements will slow economic growth and limit financial institutions' lending ability. So do you believe that raising capital requirements would raise the cost of borrowing and add cost to our economy in Main Street America?
It depends on which banks experience higher capital requirements, and there isn't any proposal to evaluate right now, of course. But it's always a trade-off. You know, higher capital is good in a sense because it keeps banks able to lend during bad times. That's really a good thing. Too much capital, though, probably limits credit availability. So we're trying to strike that balance always.
And this has been touched on a little today, but let me come from a different angle on it. But the Reserve was created to act as a nonpartisan entity that remains separate from party politics. Talked about that. And unfortunately, throughout recent years, the Fed has gotten caught up in politically charged issues like economic inequality, gender and race discrimination, and climate change. Recently, the Federal Reserve Board proposed guidance on managing climate-related risk for large banks, further proving that the Fed is giving in to some political pressure and operating outside its intended purpose and responsibilities. So our country's financial leaders, in my mind, should be focusing on addressing runaway inflation instead of worrying about the financial institutions are doing to monitor climate change. So, and we touched on this a little bit, but how can the Fed ensure that they're not placing undue regulations and guidance on banks by forcing involvement in partisan green politics? And how's the Federal Reserve ensuring they remain separate from political influence?
It's absolutely critical that we do. I mean, our independence is partly founded on the idea that we will stay out of stuff that you have not assigned us to do. And if we're going to wander all over and take on the hot issue of the day, our case for our independence is dramatically weakened. On climate change, I think we do, you mentioned the guidance, and then there are also the stress scenarios, and those are the two things that we've done. We tried to keep those tightly focused on the banks' understanding
Evis.
the risks that they'll run over the longer time periods on climate, and not slide into.
Yeah, pretty good hammer here, pointed out by Daffy. I do like that hammer.
I accept
Long wick underneath. Pretty good volume on that candle too. That could be the bullish pressure they need to get themselves off the ground again. And you can see this is kind of where we've been bouncing all morning, kind of between that area.
To our role and not try to be policymakers the way in many other countries the central bank is out there in the lead with the support of the public doing climate policy. But that's not where we are in the United States, and we're not going to pretend that it is.
I've got some time left, I'll yield back, but I just want to say as an auto dealer, I'm looking for the first day of that rate cut. So, thank you for being here, we appreciate it.
Well, good old Texan trying to crack a joke.
To the gentleman from California, Mr. Vargas, for 5 minutes.
Thank you very much, Mr. Chairman, and again, thank you for holding this hearing. Chairman Powell, pleasure to see you again. I've said it before and I'll say it again. It's always great to see you because I always think of the old Republicans, the ones who are very noble, did the right thing, didn't play chicken with the economy, very forthright. And so anyway, I appreciate you being here very much. Like some of my colleagues on the other side, I'd say the same thing about some, and I appreciate you.
This guy's covering all his bases.
Inflation is Biden's fault. So what is the inflation rate in the European Union today?
It's high.
It's high. Is it 10% possibly?
I think if you're talking about headline, I don't have this figure in my head, but it's very, very high from the headline standpoint. And they've had core inflation move up too.
So are they following Biden's then policies? Is that what caused the inflation? Because it seems to be Biden's fault.
So I think inflation is everywhere, and it must have to do with a common factor, and that common factor has to be the reopening of the economy after and the things that were done on COVID. On the other hand, each country has a little bit different case, and I think you have to be careful. We had much more of a demand-oriented issue than they did. Now they have their inflation looks a lot like ours did a year ago.
Right. Yeah, I just had to bring it up because again, Mr. Sherman brought it up. But it's interesting every time I hear inflation is caused by Biden, I wonder why is it all over the world? I mean, it's not because of the pandemic, of course, or Europe's at war. I mean, that wouldn't cause it, of course. It'd have to be Biden's policies. That's ridiculous. And I think the voters saw through it last time. So I haven't been here 15 years as my good friend, Mr. Foster. I've only been here 11. But when I first got here, the boogeyman, and I heard it all from my friends on the other side, was Dodd-Frank. Dodd-Frank was going to be the end of banking. And in fact, some of my colleagues would almost scream how horrible this was. And then we got the bankers up here during a real stress test, which was the pandemic. And we asked them, has it been helpful to have Dodd-Frank? Do you know what they said? Do you know what they said?
I don't.
Oh, they said it was helpful. In fact, it kept the banks capitalized. It was fascinating. Now, to be fair to them, they did complain about some of the smaller issues, but not Dodd-Frank in general, the bill. Then it seemed that CFPB, that became the next boogeyman. But they're starting to seem to fade on that, and I think the reason for that is the CFPB has actually helped so many people, and now a lot of their own constituents now are getting helped by the CFPB, so all of a sudden there's not quite the energy. So now they're attacking ESG.
Pretty much, David, pretty much.
And they're saying that you,
the gist of it,
everybody else is somehow conspiring to make sure they don't buy their oil or their coal. Are you conspiring to do that? Are you conspiring?
I don't believe we're conspiring.
No. Now, I heard it was supposed climate risk. Is there risk in the climate change?
Yes.
There is? Could it affect the bank?
Certainly, in the longer run, yes.
Yeah, of course it can. Do you think insurance companies take this into account?
Yes, actually, I believe they do.
They absolutely do.
Who write long duration liabilities, they certainly do.
Of course they do. I mean, they're very concerned with it. Weather is a big deal. I was a vice president of Liberty Mutual in their corporate legal department, and I can tell you weather and the changing of the weather, we used to have what we call catastrophes. And these catastrophes happen every 25, 50, 100 years. Now those 25, 50, and 100-year events happen every 5 years, every 2 years. So of course it is. I mean, it's ridiculous not to take a look at these ESG factors. We have to. And again, I'm glad that you guys are taking a look at it because it's real. I'm glad that, you know, the president's taking a look at it. And it's sad that my colleagues on the other side just want to stick their head in the sand and say, no, climate change is supposed climate change. No, the reality is it's real climate change, and it's costing billions and billions of dollars. And if you don't believe it, go ask all those poor people in Florida that had those huge hurricanes come through and wipe them out. So again, I appreciate very much the work that you've done. The only thing I hope is, as you said, if we ever see this pitch again, we'll know how to swing at it. And I hope we don't get the pitch of defaulting, because I'm not sure we'll know how to swing at that one. So thank you again.
Okay, good closer. I like that.
I yield back.
Gentleman's time, gentleman yields back. Gentleman's time has expired. We'll now go to the Chair of the Oversight Subcommittee, the gentleman from Michigan, Mr. Huizinga, for 5 minutes.
Thank you, Mr. Chairman. I'm going to move quickly, and good to see you again, Chair. You know, I caught a little bit of the Senate hearings yesterday, and you had a lot of pressure to keep the sugar high going. And frankly, if the Fed and many of our colleagues had listened to what many of us were saying, we should have been weaned off that artificially low, cheap money that kept the party going, and frankly, we wouldn't be in this position. To reference Chair Greenspan's punch bowl analogy, not only did no one have the courage to remove the punch bowl, you had people cheering on the pouring of another bottle of 151 rum into the punch bowl. And here you got folks wanting to do the exact same thing. Let's spend more. It's just, and now here we are. You have an impossible decision to slow the economy or let everyone get crushed by inflation. And we know tightening means a slower economy. Slower economy means fewer jobs. Fewer jobs hit those who can least afford to lose a job. And so in short, the lower rungs of the economic ladder will suffer more than the rest of the ladder. So that's the state of play of where we're at. I have to hit a couple of quick issues here. I wanted to start off by discussing climate, especially given the Fed's announcement in January that it was going to conduct a pilot climate scenario analysis exercise. The Fed, along with the OCC and FDIC, have each issued proposed climate risk management principles for banks that you are attempting to finalize those by the end of the year. And the requirements don't stop at the border. The UK and the EU central banks are moving to require significant ESG disclosure regimes as well. I know the Fed is taking a look at commodities capital charges in the holistic review, but even though the Fed isn't forcing banks to encompass climate analysis in their stress tests, there are many initiatives at the Fed that are going to make it more costly for banks to finance traditional fossil fuel companies. So I want to ask you a very specific question. Will you commit that you will withhold support for a new capital rule that increases capital charges on bank activities in traditional energy companies?
You know, I can't sit here and promise what I will and will not vote for, because I don't know what's going to be in the proposal, but that's not the kind of thing I think we're looking at.
I'm sorry, it's not the kind of thing?
So this isn't about, you know, this is about overall capital levels more than anything else, I think, rather than the specific thing you're talking about.
Okay. We're going to follow up on that because
Pumping.
we need to have a real-time conversation about what that is going on there. I want to quickly switch topics and go in a different direction for this next question. I want to ask you about two opinions issued by your legal staff in November of 2019 and December of 2020 to the asset managers Vanguard and BlackRock. Mr. Chairman McHenry, I'd like to submit the two letters for the record.
Without objection.
Thank you. These opinions appear to outline the parameters of both how both Vanguard
Can SPY
and
push the new high of day?
BlackRock can operate without being deemed a bank holding company. In addition to the legal restrictions outlined by the bank holding company, these opinions listed out here in quite detail list out commitments that the companies would need to take to avoid being viewed as having, quote, control. These opinions also appear to provide assurances that the Federal Reserve Board staff would not recommend that the board find the asset managers to be bank holding companies. Further, it is unclear whether the board will take any steps beyond a periodic self-certification by the asset managers to monitor compliance with the condition that they, quote, not take any action to control a banking organization. As some asset managers play a larger role and clearly strive to influence policy, in companies across the free market, we need to remain vigilant. So, Chair Powell, is the
Got
board
that
taking
new
any
10-minute
steps
candle
to
above
assess or
pre-market
monitor
high.
whether
Will it keep
Vanguard and
pushing?
BlackRock are complying with the commitments made in November of 2019 and December of 2020, respectively?
I would have to check and get back to you on that.
Okay.
Familiar with the issue.
I appreciate that, but that says to me that doesn't sound like there's an assessment that's taking place ongoing or scrutiny of that. Is somebody reviewing that, or is someone in charge of reviewing that?
Honestly, that's a very specific, narrow question. I'm quite familiar with the issue.
Well, it's specific and narrow to two companies, but not to an industry. I mean, that's what we need to be driving at. And I guess we need to find out whether there's somebody proactively reviewing these activities and these commitments that the companies have made as well as the Fed has made. So how often do you think they should be reassessed? Annually, monthly, biannually?
This is a very narrow set of questions. I can get you great answers really easily, but I don't have them in my head.
I look forward to
Time's
those great
expired.
answers, and I yield
We'll
back.
now go to the gentleman from New Jersey, Mr. Gottheimer, for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell for joining us today. Chairman Powell, when you testified before the committee last June, PCE inflation was up 6.3% year over year. Just a few weeks ago, PCE data showed that the numbers decreased to 5.4%. We're moving in the right direction, but despite the Federal Reserve raising interest rates at the highest rate since October 2007,
Rambo on the calls,
we're
Rambo.
still far off from the 2% inflation that the Federal Reserve is targeting. Do you believe 2% is still
pretty
the right
good.
target for inflation? And given the ongoing energy transition, the push to shift supply chains out of China, and the labor shortage here in the U.S., should the Fed consider adjusting its target to avoid overly burdening Americans? Would a decline to 3% inflation be enough to offer price stability without excessive economic pain?
No, 2% inflation is going to remain our longer-term inflation goal.
Are you concerned given all the other factors that I mentioned, or do you think we just have to keep sticking with that?
I think that's got to remain our longer-term inflation goal. It's the global standard, and it's our standard, and this is not a time at which we can start talking about changing it. We have no instinct to do that.
Thank you, Mr. Chairman. The gig economy has grown significantly in recent years as more Americans are working as contractors or running small businesses. The Dallas Federal Reserve has written that gig workers are often not included in payrolls and not counted among the unemployed, and this may understate the number of Americans who could be counted as unemployed. The Fed has also noted the large number of Americans who are missing from the workforce after the pandemic. Do we need to change the way we think about measuring unemployment to account for these changes?
I missed the word you're saying.
Sorry, do you think we need to change the way we think about measuring unemployment to account for these changes?
I didn't catch this. You said, what was the word?
Gig. Oh, sorry, gig. Gig
Gig
workers.
workers. Gig
Yeah,
workers.
so I'm sorry.
I didn't
Gig workers.
hear that. That's the word I didn't hear. Okay. No, we really need to incorporate gig workers both into the labor force and to whether they're working, and they certainly are working. We try to do that. It's not that we're not trying to do that. We may not be doing it perfectly.
Is there a better way to capture them? I'm just worried that you don't have the unemployment numbers may not, given we're still using older measurement ways. Are we updating our measurement?
We absolutely try. We're definitely trying to get those people.
Mike Jones, who? Mike Jones, who?
In the household survey.
Oh, good eye, Jazz.
I can get more for you on that, but
That'd be
I'm sure
great.
we're not
I
doing.
do
a
like that
perfect job
hammer a
because
lot.
It's a relatively new thing, but we're very well aware of it, and they're supposed to be included.
It'd be great. I'd love to talk to you more about that.
Great.
Thank you. As you're also aware, many of us are having discussions about the long-term fiscal health of our country and our economy. Like many, I worry that higher interest rates will put upward pressure on the national debt. CBO already estimates that annual interest costs will nearly triple for the U.S. over the next decade. You said to the Senate yesterday that interest payments are not a consideration of the Fed, but are you concerned that higher interest rates will more rapidly make payments on the debt unsustainable? And are there actions Congress should consider to address this issue?
So I'll say what my predecessors have said, which is that we're on an unsustainable path, and we really need to. Ultimately, we will get back on a sustainable path, and the sooner we get to work on that, the less painful it will be.
And rates, of course, were low between the financial crisis and the end of 2021, particularly low. After the target inflation rates hit, what do you think the new normal looks like in terms of rates and the Fed balance sheet over the next 5 to 10 years?
It's a really good question. There was a secular decline in longer-term interest rates, which we don't control, for 40 years, to the point where they were, where the 10-year was at 10-year Treasury was at 10%, and then at the end of 40 years it was quite low. You're at higher levels. You're at, as you pointed out, levels we haven't seen since earlier in this century. I don't think anybody knows what this is going to look
I
like.
thought he said blank
5 years
workers
down
had
the
increased in
road.
the years.
So you have to ask.
Yeah, that'd be a little
demographics
wild.
Haven't gotten better. Globalization may actually.
All right. How's everyone in the stream doing? You guys surviving? I'll turn the stream back, the Powell stream back on here in a few minutes. I was just giving y'all a little break from here and all that. Possible. We don't know yet. We still have this candle to form, mark, so don't have clue on that yet. But as long as he's maintaining the same resistance, definitely helps you out to picture that. I'd give it a few more moments first. Could say you have a 5-minute 3-bar play. I think my big thing is that we've already been here and rejected before. So be very careful.
Ten minutes still got some decent time, but it's also setting up a 3-bar play.
You're good, Mark. I figured that's what you meant. I made it through the webinar without taking a nap. Stream right on course. I keep forgetting that's where the webinar is. If you do have the course, I would check out that webinar. It's pretty long, but it was a lot of really good information, to be honest. Every speaker was 10 out of 10. I was on there for the majority of it, but you had like Jay Dunn, Champions Vibe. There was like a few other traders. Jay Dunn was honestly my personal favorite. That dude was pretty cool. Devin?
What's up?
Did you do that on purpose or was that on accident?
Do what? Oh, on accident.
The long P's.
Yeah, I must have fat fingered.
I was like, there's no way he meant to do that.
P for pump it up, man. I'm trying to get this market to pump.
Nvidia does look a little top heavy. Somebody's saying that in chat. If you go from wick high to open of last green candle, they are in supply of intraday. AMD looking a little tired too. SPY at the top of their current day range.
3-bar play on the 10 minutes still could play out. 30 seconds left. Has not broke that 50% of that previous candle. Volume's a little more than I'd like it to be. So that's not perfect, but it's still looking decent.
When do we short DKS? I'll have to check it out. First red day and wait, hold up, chat moved. First, wait, I'm missing messages now. First red day in 9 days. This feeling sucks. You'll get it back, Tobias, no problem. I would completely just wipe this day from your head, to be honest. It's not like this day was anything crazy.
Hey, red days happen, especially after 9 days, man. It's bound to happen. Usually, you know, size down a little bit when you're on those nice green streaks. So when you do have the red day, it hits even less. And you feel pretty good about it because you don't really lose any money.
Webinars for energy side hustle. Took a hit on SPY, popped after I hit send and filled extra 15% down. Worst hit I've taken. I want SPY to pull back to pre-market high, then pop. Semi's trying to heat up. Good mindset, Tobias. See if we get this pump or if we're about to slow down and go back to the middle of this range again or not. We're gonna pump up to 400.60.
So we're just bouncing around pre-market high area. Nothing crazy. If you haven't scalped the market yet, it's probably just best to wait to see when this medium plays out and what we get. It's kind of gone longer than I thought it would again. Oh, did it? I missed that. So we still got an hour. Right now we're just rejecting off pre-market high. How's everybody liking the J Powell comments? Has he said anything that surprised you, or has it all been on cue?
I'll turn it back on. You guys seem to be just chilling.
Chair Barr in charge of the Community Reinvestment Act rulemaking. With that said, I'm going to dive right into my questions.
183 votes. 44% say red, 30% say green, 26% say flat.
The report notes that the Federal Reserve and U.S. Mint will be jointly contracting with a third-party consultant to review the coin supply chain and develop recommendations to improve it.
Got us dreaming like the song.
Could you provide
Must be
us with an update on
dreaming.
what the Fed has learned from its review of the coin
It's funny how that's like the song of our chat.
during the pandemic?
It's our song.
We know that the flow of coins, the natural flow of coins in the economy slowed down a lot because people were staying home and that kind of thing, and they may have switched to non-coin-based means of payment. And we feel like that, the evidence is that that's continuing now. People are paying electronically, and coins are sitting in jars and on people's desks and at home, and they're not circulating back into the banks and thus to the retail stores. And so we're working on that. We're working with the Mint, we're working with all the stakeholders in the coin ecosystem to try to address this problem, and we're well aware of it.
So it seems to me that what we learned from that is that it's probably necessary to have a greater reserve of coins if there is such an interruption in the future, so that commerce is not indeed interrupted. Would you share that broad view?
SPY coming back down pretty harshly with volume.
Yep, short-term volume increasing. See the bigger time frames coming up. Still a minute left on the 10-minute candle.
Most likely wanted to touch today's open. 398.40. We're just above that.
Up on Mr. Lukemeier's concerns that he expressed earlier. As you know, the Consumer Financial Protection Bureau's funding mechanism is intricately linked to the Federal Reserve System. According to Title 10 of Dodd-Frank, each quarter the CFPB director requests an amount that is reasonably necessary to carry out the Bureau's authorities, and the Federal Reserve must transfer that amount so long as it does not exceed 12% of the Federal Reserve's total operating first 5 years of the existence of CFPB, of course, there was a relaxation there with respect to that 12% cap that allowed $1 billion annually to be spent beyond that number, so long as the reported excess was sent as to the congressional appropriators. So Powell, in your terms, has the Fed ever rejected a CFPB budget request?
Alright guys, I think I'm going to end the stream here, but I want to go through one more update with you guys on what we're going to be looking at. So for today, I really would just try to chill. I really wouldn't try to go too crazy. After the meeting's over, I do believe you'll get some relief buying just because the meeting's over. So you could look towards 400.60, maybe even 402 by the end of the day. If we don't get any kind of break of range, I would look to see, are we still holding above 397.30, 397.60s? Are we still holding under today's high in 399.40s? See if we're stuck in there or not. If we are, then the game plan's the same going into tomorrow. If we're above it, then we'll need to see if we're going to hold above 400.60 or reach 402. And if we're below the range, we need to see if we're going to hold under 396.40s, because those do matter on the bigger time frames, which I'll show you right now. Oh, and here's we did the bigger time frame. I charted it out with you guys this morning, and I showed you, essentially, if you don't want to watch all those other levels on that other chart, you could just watch a couple on this one. I showed you guys exactly where I got them from, why I grabbed them, why I put them there, and all that good stuff this morning in pre-market prep. And you can see we never even got back above previous day, which was demand, now supply. We never even got into supply. We never broke under demand, so we're just kind of stuck between these two areas. So that's kind of where I'm looking for us to move next. On the bigger time frames, though, that's going to help us see, all right, are we going to test these lows that we just previously made, or are we going to get back into this range where we don't have as much volume sitting here? So I'll be paying very close attention to that. But we have a plan for both up, down, and neutral, regardless of where we go. But I hope you guys enjoyed today's stream. Thank you guys for voting in the poll. It looks like it's going to be a very close one. So we'll see end of day who was all correct and stuff. But yeah, I'll see you guys later on. Please tune into the Discord. Link is in the bio if you want to join. I'll send another invite right now in case you guys don't have one. Here's the invite. So join that Discord. There we are. You don't have to pay anything. You can just join, talk with everybody for free. And yeah, all the good stuff. But I'll see you guys again tomorrow. Today's Wednesday, right? Yeah, so tomorrow's Thursday. Then we have full day stream Friday. So I hope you guys are ready for Friday. But yeah, I'll see you guys later on. Have a great rest of your day.